That's easy. So here's the situation. This is the story for today. Futures market is opening very strong for the US dollar, so that means the equity market is probably going to push gold down. The play here is basically if you got in buys right now, you would hold this probably till about 8:30, 8:45. That'll start to then diminish, and you'll start to hit a rejection around the top of, I guess, the daily candle that's current right now. So I think the top of the daily candle is like 1849, something like that. Come 9:30, that'll pull back and it'll probably start to dip, and that'll retrace and then drive further down. So you have two options today. You can either take the trade right now, knowing that the futures market is pretty good and gold will probably retrace a bit, or you can wait till 9:30 and get a better entry when you see the exact way the market is moving. I prefer just to exit, so I took buys right now and I just got out. I don't need to play it much further. There was like a $3 move here in like 5 minutes.
Yeah.
But that's sort of the idea, because we may break the high currently. Like, you're looking at like you said 1848, 1847, but it's going to be very tough. So I think your original idea of sells below like 1842 is probably valid, but it'll be later on in the morning. So I think if people want that, that might be your safer route, just because the equity market is opening up positive, and every week or every day this week the equity market's opened positive, huge with these numbers. Gold has dropped significantly. It hasn't continued up. So I mean, there might be an opportunity there for sells later on. So it's just how you feel in terms of what you want to do. But buys here are good because of the fact that we had that pull down at 7 a.m. So we were right with the liquidity grab, and then it just drove right back up into the range.
Did you see that drop on indices yesterday?
Yeah.
It was crazy, right?
Yeah.
Insane.
Yeah, this is where you can get that link. I mean, it's just the pre-market data. So all positive. That's what I thought initially too. Like, I'm sorry, Mike. Like, by NY Open, we make it that drop, but couldn't really get like a stronger close right below this area because our data was positive. So you're right. Maybe it's likely to drop at NYC.
Yeah, and that's what confuses people. People get like sort of stuck, and it's unfortunate. Like, I mean, but then so you play all the different factors today. So today's Friday, end of the week, so there might be a bit of a pullback for next week's candle to continue to trail up. I think long term, I think we see gold hitting about 1860 just based on the current structure of the market. But right now, you might see Friday there might be a little bit of a pullback. This is the tough part, because this range, if you look on the hourly, we're coming into a rejection area again. So that's where you would play off that range. You could have been like, okay, I'm going to drive up to here. So what you may want to do is wait till 8:30. You might get a pullback one more time, and then you might break through to the top of this range. So the top of the range, exactly where you have 1849, we may hit that, because you're essentially what you're saying is. You're basically saying this was your support. You'll get one more drop down here, and then you'll just get a drive up like that, and it'll come to this top, which basically fills this wick. And if we know from like just normal data, whenever we have a rejection wick and we're driving into that momentum of that rejection, it drives through rather quick. So it'll be a quick spike, and then you'll have to reevaluate at that time. But if you notice, anytime we hit a rejection area or a previous rejection area, now we're going in momentum. So what I mean by we're going in that direction, you get a quick spike right through it, whether it's going up or going down. You're going to get a quick spike through that area because it's no longer rejection. It's like a valid sort of highway for volume to flow through. So I get a lot here at 6:30 every day. Okay. 8.2. You need to at 6:30. Oh, okay. Need to be here at 6:30. Yeah, so that's basically what you're doing. I mean, I think if you take sells, you're waiting for a candle to pop up here, and then you're looking for that drive down. Ideally, if this hour candle goes up and then creates this wick here and starts to reject here, that 9 o'clock you're going to get this basically. So you have this, and then continue that way. So you have both opportunities. It's just the sell may take a longer time for it to appear, and you may need more confirmations, and you might find it happens at like 9:30 or 10 o'clock Eastern time. It's not going to happen for the next hour. So you can say, okay, I'm going to try and take buys, but my range is a little tighter, and I have to be aware of that. So this might be a tougher trade to take now, since you missed all this move up. But I still think you have to here and then eventually up to here. So I mean, you still have room. But I mean, once again, where's your stop loss going to be? How are you going to manage your trade? This was sort of your best spot, because it's like, if we don't break this, like Raja said, we're going up, so it was pretty easy. And then you say, well, what's your stop loss? It's like, well, you don't need a stop loss, because you have rejections here, knowing we're going back up, and knowing that all the structure of the market is going to go bullish for the time being, because of the fact that the market's going to set up to drop later on. So